Hey everyone, Swing Pony here. Welcome to the Place Your Trades Network, where we discuss trading daily options using the CME Group's event contracts. These give us access to 10 different futures markets, including the E-mini S&P, NASDAQ, copper, gold, silver, natural gas, and more. We are actually adding Bitcoin into the mix of daily options for event contracts. So I'll be the first to say my days with crypto are probably over. Not rushing to get back into them, but in terms of daily options using event contracts, I'm game for that. I'm very excited. We do have a fantastic guest ahead today. Sara is going to be joining me. You might know her as the PerceptivTrader on Twitter. She's a trading performance coach, and she has just really, really great ways of articulating sort of the psychology behind a lot of the decisions that we make in trading and offering action to help sort of nip the, recurring behaviors and patterns that we're seeing in our trading journey. We did put out a post to see what topic you guys want covered, and the winner was how to let your winners run. I'm a firm believer in coming into the market and just getting your slice of the pie. It's not about getting in at the perfect bottom, getting in at the perfect top. But I do think there are times, even in my own trading, where I've seen, okay, I sold myself short there. There really was no reason to lock profits that early. I could have set a trailing stop. I could have let my runners run a little bit longer. So I do think, the issue of cutting losses is one thing, and it's great to be able to do that. But the other side of it is actually, embracing your winners and letting them run a little bit longer than you usually do. So Sara's going to come out here and give us some action items and tips on how to do that. Before we get started, though, this podcast is brought to you by Tradeovate. They've come up with a custom app that allows us to trade all of these event contracts. And speaking of event contracts, like I said last week and the week before, the Place Your Trades team, all of us are headed to the Money Show in April. If you're not familiar with it, it's hosted in Las Vegas, and we're actually doing a giveaway to have one person join us there. So if you want to enter to win, you have to do that before March 1st. All you have to do is go to placeyourtrades.com/Vegas. So sign up before March 1st. It's going to be a blast. I have to say, with this whole trading experience, like, I've made so many trading friends online. I've only met a couple of them. I am so excited to just show up to this thing and be able to have dinner with everybody and be face to face and get to talk about all the stuff that we do behind the screens, but actually do it in person. It's going to be a blast. You should join us. And if you can't make the trip and you end up winning, you still get $1,000. So that's the alternative. Sounds like a win-win to me. All right, let's go ahead and get our guest, Sara, the Perceptive Trader, out here. Hello.
Hello, guys.
Hi, thank you for joining us.
Thank you for inviting me.
Yeah, of course. I see your posts all the time. Like, you have so many fantastic little nuggets of wisdom on trading psychology and action items, which I think is very important, because wisdom without the action, isn't always effective. But you are just a great resource of a lot of what traders go through psychologically and sort of where those root issues come into play and how to tackle them. So can you tell me a little bit more about your background, both as a trader and how you got into the psychology aspect?
Right. So yeah, the first time I got into trading was just some friends that were already doing it, and so I knew through them. I was still in college, so I was taking my bachelor, which has nothing to do with what I do now, by the way. And yeah, they just introduced me kinda, and I started just demoing a demo account, a sim account, right? And with no idea what it was whatsoever, but just started to learn the basic knowledge, like the technicals, right? And at the time, then I got into my job related to my degree. And I've been there for 1 year. I was kind of splitted because I wanted to work on my trading and I wanted to move forward with it, but I was still full time. I had no time for nothing else. At the end of my job, every single day, I remember I was just studying technicals like I would be on college, like doing my appointments. Yeah. So fast forward, I decided to quit my job. So I was in it for 1 year, and it was really not my thing. So I just put things on the balance, and I asked myself, what are my goals? what do I want from me, from my life? And then on the other hand, what are my actions right now? Are they according to my goals? And the answer was no. So when you put things like this on the balance, you quickly realize where you have to head in your direction. That's what I did. So I jumped out of my full-time job to part-times, so I could just cover my basic expenses, right? Because I needed to live to survive. And so basic part-times just in the supermarket. I also worked as a cleaning lady, and so I experienced quite the reality of what it is to work for something you really want. But what that permitted me to do was just working on trading. So my long-term vision allowed me just to focus on what was important, and then I ended up to just quitting my part-times. Quite as well leap of faith, but it actually went well because I was already with my live account. At the time, you never would hear about like funded accounts and stuff. That shit didn't exist. So it was just live accounts. Just put like some savings in there, and I just started to trade, and I lost a lot of money because I was constantly depositing money and stuff. But eventually, I just quit my part times, and so
The
far,
rest is history.
yeah,
I
till
love
now.
that. I love that you mentioned, I worked at the supermarket. I worked in some cleaning services. Like, I think one of the most enticing and beautiful things about trading is, first of all, you do what you have to do to make it happen, right? And it sounds like you did that. I quit the full time. I did what I needed to do to make this work. And then also the aspect of trading that's like, I remember up until a few years ago, like I had no idea we could just trade like this. I had no idea this was something that was accessible and open to regular people. And that, I think, is the beauty of it, to be like, you know what, I have a game plan. I want to do this. I may not have a background in this, but as long as I can put in the work, the effort, and I have the drive to do it, I can make this my reality, and I can get exposure to some sort of finances that I would have probably not had otherwise.
100%. And the question or the thing that most drove my will at the moment was, well, if I know other people are doing it, even if it's just online people, if they are doing it, who am I to not be able to do it as well? Like,
Of course.
I need to crack the code. Like, I need to get the same as other people are doing it. So it was just a proof, and then I surrounded myself as well with people that were making more money than me. And then I think that's key, because a lot of people are just in these environments, and nothing wrong with it, because I was as well. But home environments where the parents or the people they have around them, friends, they just don't support them, or just have small mindsets,
Right.
so that's how it is. So you have
Right.
to surround yourself with growth mindsets, and people that are making more money than you, people that are making, I mean, not necessarily more money, but they have to have a growth mindset. And when you go from a group of friends that don't support you to a group of friends that have this growth mindset, your reality changes, your perception widens, and you see other possibilities for you as well,
Of
as a person,
course.
as a trader.
Of course, it's all about having people who sort of, we all have friends that I think at the end of the day, you don't want to be stagnant, right? There's nothing wrong with it. Some people are very happy in sort of a go with the flow, I enjoy life as it is type of way. But there is a beauty in surrounding yourself with people who are better than you in certain ways, and sort of kind of inspire you to level up. Because if you're sort of always hanging at the same level, you don't really have that desire for change. But if you are with people who have leveled up, people who do have the drive, they are passionate, they are pursuing things, you get to learn from them. And I think that's really exciting, and it truly does push you.
100%. Yeah, I agree. I mean, it all come down to choices, and it's known that you are in competitive advantage or just in advantage when
Mhm.
you are closer to your goals if you surround yourself with people that have a growth mindset, and they want to self improve, to improve themselves. So yeah, it's just one plus one is two. And if you really want
Totally.
to achieve that goal, I think all your choices, all your actions have to put you there, to
Sure.
lead you to the goal. And if you're
Sure.
really determined.
I think that one of the most detrimental things is when you have something in mind, a place that you want to be, a thing that you want to do, but your actions don't actually align with it. That's sort of where that inner turmoil comes in, and that lack of growth, and that just feeling kind of stuck in a rut because your mind is somewhere, but your actions are somewhere else. And when you don't have that alignment, it's just not a good feeling.
Yeah.
Speaking of all of that, talk to me about the psychology side, because obviously it sounds like that is your passion. That is what you were beautifully great at articulating, like the way you kind of express things in the words. I'm like, like she gets it, the way she wrote that. People who can articulate the things that you're feeling in a way that sometimes you can't, it's always like really nice to be able to read. So what got you into the psychology side?
Yeah, it's interesting. So I have no background whatsoever in psychology when it comes to degree, college, whatever, but I always had a profound interest in why people do what they do. And it started in me, like, why am I doing this? Why do I do, why do I react to certain triggers, to certain things like this? Because I battled with some things that I wanted to change about my mind, about the way I related with people, about how comfortable I would feel in a group or whatever, and make friends. So I was like constantly asking myself things about me, like questioning everything. I think is key about yourself and
Mhm.
also about the world. Like, why are things like this? So I always had this interest in neuroscience and in human behavior, and everything that I could pick up, like books, mini courses, workshops, whatsoever, I would. I think the key is really being curious about it and having a profound interest, because I know a lot of people that are in psychology and then they are working in psychology, but they are just following a playbook with their clients, because that's the
Right.
system. The system doesn't allow you to just be there and use your own approaches with the clients. So I don't think I would want to as well be um, in that kind of work, because
Sure.
it's just very limited what you can do and what you cannot do. But I found that there's a deep connection between trading and psychology, and when I found that, my trading routine changed. So I changed a lot in my trading, and then I started to share. I don't even remember. I think it was back in 2020. I started to just share my insights, which at the time was just like simple. I was not expecting nothing from it. Started on Instagram, then I went to Twitter because it's just a writing platform. I started to
Yeah.
just write here and there, and people just actually were enjoying what I was writing. So that was cool. Um, and yeah, I love to write, although it's not my main language. So sometimes I struggle a little bit with some words in English because
Sure.
it's just not my main language. But I think the way I put things, it's just I use the basic the
I would have
basic.
no idea, by the way. Your writing is just, it's immaculate. It kind of reminds me of my mom. So we have an Iranian background, and when we moved to the US, she didn't speak any English, like absolutely zero. And she went to college and university, and she studied to become a teacher. And I remember watching her. She would have her textbook on one side and a dictionary on the other. And she would go through from textbook to dictionary, textbook to dictionary. And now she's been a teacher for years, but it's just like amazing that the language barriers and all that don't really matter when you have the drive and the dedication to make it happen.
Yeah,
It's very
totally. And when it comes to
inspiring.
trading, thank you. And when it comes to trading, it's just it sounds better in English. I mean, there are some things that I
Mm,
try to explain to my friends in Portuguese or in Spanish, and it just doesn't work as
you're
well.
like, no,
Uh,
doesn't make sense. Um,
yeah.
so let's get into the topic for today. A lot of people struggle with things like cutting losses and, holding themselves back in that way. But another issue that isn't talked about as often is how to let your winners run. And Sarah and I did a little poll on Twitter. We had 3 different topics. What do you guys want us to cover? And this was number 1. So you're a trading coach, Sarah, is this an issue that you see a lot of people deal with? Like, I sell myself short, oh, I should have held for longer, this happened. They look at the trade afterwards and they're like, I could have made this much more. Is this something that comes up for a lot of people?
Yeah, it is. So there's kind of two people when it comes to exits to take profits, which is people that can help themselves but taking the profits too early, and then the other group
Mhm.
is people that um, just don't close the profits when they should, or when they exit, their exit method tells them to, because they are too perfectionist and they really want to catch the bottom and the top, or the top of, and the bottom. So there's these two kind of people. But one thing that is crucial to say here is that before you diagnose, quote unquote, yourself with I'm taking my profits too early, know that every exit method has gonna leave you profits on the table. There's no single exit method that you can have that gonna catch you the whole move all the time. So sometimes that may happen, but it's important to know and to be sure if by looking at the big sample of your screenshots of your trades, past trades that you collected, right, and as well back testing, if there's really a big amount of winners that you are not taking, that you are not maximizing your
Mhm.
profits, and you are actually leaving a big portion of profits on the table. Because many times what I see is that people think out of perfectionism, oh, I could have caught
Mhm.
more, but in essence they really need a big sample of trades to test that out, right? But yeah, there's some traders, well, there's a lot of traders that struggle with this. They just can't help themselves for one reason or another. One reason is fear, just fear of losing. They don't want to lose, so they just lock in profits there. They wanna
Right.
they focus on like each trade. They focus like on each trade, right? And they want to catch, they want that each trade to be a winner. Well, every trade to
Mhm.
be a winner. So they just force that by taking profits too early. At least they have a winner. That's how they think.
Sure. Sure. I think perfectionism is a really, really good point, because you just can't. You can't have the perfect entry. You can't have the perfect exit. And guess what? The beauty of it is you don't need to. Like, I had Matt Petralia on as a guest last week, and we were talking about the fact that as a trader, you could be wrong half the time and still be a profitable trader. Like, that is the beauty of this game. And really, there is no room for perfectionism in it, because it's just going to set you back. Like, you have to be able to take losses. You have to be able to accept, hey, you know what? I took some profits at my target. It continued to run. It is what it is. Like, is that something that I could treat differently next time, or did I do something wrong? Um, I think, for me, scaling out of positions is absolutely key. Like, that's one of the things that's been the most helpful to me. When I actually started trading, Radio Silent Play was my mentor, and he taught us something called the law of infinite return. He said, however much money you like put into a trade, basically once the stock runs, take out your initial investment. Like, if you take out your initial investment, then you at least have that, and you can then continue to scale out along the way. There is sort of this beauty and peace of mind in knowing, like, hey, and I do this with event contracts all the time. Like, I don't know if this stock is going to close at my strike at the end of the day. Why don't I take out my initial investment, take out some profits, and then whatever happens with the end, I'm okay with it? Because especially in this market where we have crazy, crazy volatility, like, you just never know what's going to happen. And if you have an account that affords you the ability to have multiple contracts and scale out along the way, I think that sort of reduces the FOMO, the selling yourself short, because that way you've locked profits, you've got some gains. Let's leave a couple contracts in here and let's see what happens.
That's, I mean, now you said it, because there's traders. What they do is just setting one level to take profits. And what does that lead to, for them to do is leads them to put all their ego, all their expectations into that level. So my question for them is, if price gets close to that level, what you gonna do? Are you gonna wait one pip, one tick, 1 point to let you down and just not take profits? So the first thing I tell them is, what's your exit method? first question, and it needs to be some kind of defined, right, to remove the doubt. This is important, but there are also discretionary traders. So for them, and also for the systematic ones, it's important to scale out. That's the key, because it removes your ego as well, and your fear. Attenuates your fear, because it's impossible to remove your ego and fear from the game, right? But it kind of, if you just like you said, take out your initial investment out of the trade, or split your position into 3, or even only into 2, and take out 50%, and over time you can just set goals like, okay, I'm gonna start to take less on the first partial and more on the second one, or splitting it into 3. So there's a lot of possibilities when you scale out, and it helps you to remove this perfectionism and widen the possibilities for the uncertainty of the market, because I mean, you never know what's going to happen. And with that premise into account, if you leave a runner, you're just you just don't have pressure, and then you are risk free, right? Stop loss to break even, or trailing your stop, whatever, and you are free to go. I mean, you can do your life. You can even maybe hold a trade as a swing trade. And if you have that runner, the truth is that your probabilities are bigger to collect more profits. That's just the way it is. So you want the probabilities on your side.
Sure. No, I think those are all fantastic points. Especially, when we talk about scaling out, one issue, because look, I talk about emotion and stuff like that, but I think one of the most important things to know is just because somebody talks about it doesn't mean they've mastered their emotions or mastered their ego. Because like you said, those things are always going to continue to come up. You just maybe get a little bit better at awareness and figuring out how to like impede the action before it happens. But recently I had a couple swing trades that I had, but this market has been so like volatile, and I'm like, I just don't feel comfortable holding things overnight. But I bought time with them, and even though I had that time, once I hit a certain profit, even though I hadn't hit the levels, I was like, "Ooh, okay, this is great. I'm just going to go ahead and lock here because I don't know what happens tomorrow." But the silly thing about that is there's a reason I bought time. I bought a month out. I could give this trade time to play out. And then the other thing was just relying on the percentage gain. And that's sort of, I think, where the emotion comes in sometimes, is you see the percentage and you say, okay, I'm going to lock profits. I'm all out here. Instead of being like, wait, did I even reach my technical target? If I didn't, then you know what? I can probably hold on a little bit longer.
Yeah. Just it's exactly like that. I mean, many times traders take the profits, and out of fear, out of emotion, they just don't ask themselves what it's right to do right now. They just their fear is so loud that they can't help themselves but act on that fear, and that's when just running away a little bit here from the topic, it comes the question of not merging yourself with your thoughts, not merging yourself with your fear. So, because I mean, all the things you do in the market, all the emotions like anger, frustration, the bad emotions that lead you to do the mistakes, they come out of fear. So from the moment you just look at your fear from an observer's perspective, and you think, okay, I'm feeling fear, but it doesn't mean I have to act on this fear. Doesn't mean I have to merge my sense of self with the fear and acting on it, because the moment you act on it, you are giving it reason, right? And just sort of, okay, I have a space here that I can use, which is a space between emotion and behavior. And the moment I acknowledge that space, I can use it to interrupt my pattern. And so you ask yourself, what is this fear telling me in accordance with what I really want to do? Where is my technical exit? What should I do here? And planting this evidence, because when you know what you need to do, it's just a matter of having confidence to do it.
Sure.
And there are techniques that you can use for this. So
what is one that you could give me off the top of your head? Like, what is a good technique?
Yeah, right. So a fast technique would be, if you want to increase the confidence in what's right to do, just plant some evidence close to your desk, close to your laptop, whatever your desktop that you're using to trade. in order to raise this confidence. So for example, a technique would be just collecting or printing 3 to 5 setups where you took your profits too early, but the price kept on going higher. And then when you are struggling with that fear real time, you just take a look, you interrupt the pattern, you extend the space between emotion and behavior, and you use it to look at those prints, look at those charts, and okay, let me see this right here. Okay, this happens a ton of times because I backtest and I mean I saw my
You have
past
the
screenshots and
data.
I noticed it a bunch of times. You can also use the amount of money that you missed roughly. It's very difficult to estimate, but
Sure.
an estimation of the amount of money that you already missed with that. And once you look at it, your brain gonna predict the consequence. You don't want to miss more money, so you're gonna take another behavior here, because these gonna formulate new emotions in your brain. These kind of things these techniques gonna provide you new information to your brain. Your brain gonna readjust the emotions you're feeling, and then you're gonna behave in a different way. So it's not about ignoring emotion or just trading emotion free. It's just knowing how to work with them, how to work with your brain with the features it already has, because you can't remove nature, you can change your nature, human nature.
Sure. No, I love planting evidence, because I think, emotions do take over in trading so often, whether that's not cutting losses, not letting winners run, FOMOing into trades. To be able to have an objective thing that you can look at that sort of zaps you out of that emotional decision in the moment, I think is key. I love that. And, it's kind of funny because sometimes I think we can really be our own worst enemy. One of the things that I've noticed before is sometimes when I just step away from a trade and I'm not looking at the 5-minute chart or the 1-minute chart or the 10-minute chart, I'm just stepping away and letting it do its thing. I have my stop in. I'm not going to micromanage it. A lot of times that's when the trade runs. I think sometimes we become so glued, they say a watch pot never boils, and we just get so glued to the screen and every single candlestick on a very short time frame that kind of leads to the rise in emotions as well, as opposed to like either stepping away or looking at a larger time frame. Wait, this trade is still perfectly fine on the 30-minute chart. This trade is still perfectly fine on the hourly chart. So, I think when in doubt, zoom out or step away is also a great way.
Totally. I mean, it's just so basic and so simple, but so effective. It's just if you remove the trigger, your behavior gonna change, right? So if the trigger is
Right.
looking at the charts without blinking and just micromanaging, doing stuff that you never did before, just for the sake of trying to control something you can't,
Sure.
this gonna, like you said, rise emotion and faster lead you to the behavior you wanna avoid, to the mistake. So if you just remove the trigger, if it's possible to doing so, which in this case it is, step out of the market, just put some alerts and build a system that allows you to do so. That's key. But if you can't remove the trigger, which is, for example, many traders struggle with like one loss or a losing streak or a missed trade, these are triggers that you can't really remove. They're gonna keep happening. So it's more dealing with the emotion. But if you can remove the trigger, it's easy to turn the pattern into a desired one.
Sure. Sure. I love this. So if you were to give me a summary, maybe like a top 3 to 5 little action items or things that people can do to let their winners run, what would you say off the top of your head?
Okay, so first thing would be defining more your exit. So you remove doubt, you remove the uncertainty at least out of your what you have to do. So defining the exit method a little bit more, than scaling out, that is key. If you are taking only partials at one target, just do it. Try it out. Try it out for like, depending on your trading style, but try it out for the next 50 trades, to not say like a period of time, and see it for yourself. Really, this is all trial and error, and if you don't go ahead and experience for yourself, you're never gonna get to know. You can't rely on what other people think or on what I think, right? I'm telling you this,
Sure.
but you have to go and try it for yourself. And then a key process that I believe everybody should do it is just, at the moment you feel the urge to take profits, recognize what are you feeling, recognize what's going on in your mind, what are you telling to yourself, your emotions, and just write it down. And writing it down, it's really the interruption. So use that time between the emotion and the behavior in your favor, interrupt the pattern. For 5-10 minutes, just write things down, what you're feeling, and then see at the end of that small activity, see, do I feel the same urge? And then replace the behavior with something you actually want to do. Sounds simple. And then the walk away. The walk away part is also crucial. If you can do it, do it.
Yeah.
If you can place alerts. But yeah, recognition, interruption, and replacement. These are key.
Recognition, interruption, and replacement. I love that. That's like the 3 perfect action items. And it sort of is something you get better at over time, right? Because it is very difficult when the emotions take over to recognize that you can put a pause in between the emotion and action.
Mm-hmm. It's very difficult. I mean, we're here talking like it's easy, but it's better said than done, right? When the noise is really high, it feels that you are not able to stop it until you do the mistake. But you actually have more control than not. So instead of like telling yourself, don't take profits now, instead of doing that, just step back and just have the goal of stopping for 5 minutes. Just okay, prove to yourself that you can do nothing for 5 minutes, and this gonna for itself alleviate the emotions. If you can execute a breathing technique out of like a deep, like 10 deep breaths, it helps. But prove yourself that you can be quiet for 5 minutes and just not do what the emotions are telling you to do.
Sure. No, I love it. It's all about mindfulness. Sara, you've been fantastic. Guys, if you're not following Sara, she has so many great, you have little a Substack, right, where you write little articles with action items that people can go through.
Yeah, so I recently moved newsletter. I always had a newsletter for like 1 year, trading psychology and performance topics, weekly emails. And so I changed to Substack because you can just go to the past articles and see what I wrote in the past. And yeah, I just try to address topics that you guys are struggling with. And at the moment. And so if you have any topic to suggest me, just send me an email and I'll take it in consideration for my next newsletters.
I love it. Yeah, I mean, I could sit here and talk to you about so many other topics. I always say the hardest part about the show is keeping it to 30 minutes because, much like you enjoy psychology, I think this is the most fascinating part as well. So thank you so much for coming on. I think these were all great tips. And yeah, it's all about that recognition and interruption, isn't it?
I would say.
Thank you,
so
Sara.
much for having me. I really enjoyed it. And yeah, looking forward for maybe a next one.
So much to learn from Sara, the perceptive trader. I loved having her on, and it really had me thinking about different ways that I can be better about locking profits and really not cutting my potential short. I really do think that there's a difference that gets mixed up sometimes between like FOMO, oh, this ran without me, this is just me wanting the whole move versus like, I could have actually done something differently there. I could have let this trade run a little bit longer, whether it's not having a technical reason to exit, whether it's, having emotions get in the way, whether it's trading simply because you see a percentage and you want to close green, not because you've actually hit any of your levels or your targets. Definitely something to take into consideration. I know for me, a lot of times, when those emotions get in the way, I do have my levels mapped out. These are my profit taking levels, but I'll see the percentage ahead of time. And sometimes that'll override my ability to trade based on technicals. So that's something I'm going to be really mindful of moving forward. The other thing, which I will say I really and love doing, is scaling out of positions. I mean, if you can afford, sometimes there are people who have much smaller accounts. They may only be able to have a contract or two. And if that's the case, you work up to a bigger account and then you can do more scaling out. But to anyone who has the kind of account where you can have multiple contracts, you can scale out along the way, it almost never hurts to leave a runner. Have a break even stop, have a trailing stop, Write out the potential, see where it gets you, grow your account even more. Thank you guys for joining me for this episode of State of Flow, and I will see you guys next week.